we are going to get an awful lot of Chinese data. Now, in some ways, we are all looking for insight into what is happening with the Chinese economy right now. We've got this Lee He meeting with Janet Yellen later this week. I think it's on Wednesday in Zurich. That may serve up some information. But overnight, we're also going to get quite a lot of data out of the Chinese economy as well. Some real kind of key activity indicators for the fourth quarter into December. So we're going to get GDP data. We're going to get industrial output data. We're going to get retail sales, fixed asset investment. We're going to get an insight into what is happening with the employment market as well. Huge amounts of information that are going to be delivered. Now, there are questions at the moment about the veracity of some of this data. Certainly, the COVID data are being called into question. But this kind of economic data, I think, is going to be pivotal for investors, not only as they judge the trajectory the Chinese economy is on, but the ripple effects into other economies, particularly Europe. This European trade that we've seen since the beginning of the year, driven so much by this reopening that we are seeing here in China. So let's get more on this bumpy recovery, let's call it that we're seeing in China out of COVID. We're joined by Bill Lee, Milken Institute's chief economist. Bill, great to catch up with you. We've got a whole raft of data coming out overnight. What do you expect that data to deliver?
I think right now the slowdown in China is going to continue because the disruptions from the zero COVID policy and the huge number of infections going on in China right now is going to disrupt the production chain for quite a while. People are assuming that they will follow the U.S. path or the Western path, where the resumption of consumption in domestic markets will start to spur the recovery. I think that consensus view is questionable because right now China's suffering from a collapse in consumer confidence due to the property market and a huge amount of youth unemployment that's disrupted family incomes. So the two things that we need to come in line for China to be a locomotive for Europe is that the COVID outbreaks are transitory, which is doubtful because 90% infection rates are leading to higher and higher cases of difficulties because of the low vaccination rates there. And number two, the Chinese consumer may not come back online again as quickly as people think because of the huge wealth effect and income effect to the family income. So those questions, I think, need to be answered before we can be confident that China will serve as a locomotive for Europe.
But I hear what you're saying about family incomes. The Chinese authorities didn't provide the same level of stimulus that we saw in the United States and in Europe during the COVID lockdowns that China experienced. But what we are now starting to see is the Chinese government making it very clear that it will now provide significant stimulus. What impact will that stimulus have?
Well, Xi Jinping and the provincial authorities are putting out a lot of consumption subsidies right now, similar to the checks that we handed out here in the U.S. and the subsidies in Europe. But Chinese are also tremendous savers. They often just put away a lot of these consumption. Now, there's no doubt that there will be a burst of consumption. The question is, how large a burst of consumption will we have, and how long will it be? How long lasting will it be in the face of all this uncertainty? I think that the Chinese propensity to save might dominate the size of these subsidies.
So are we going back? Can we go back to pre-pandemic levels of Chinese growth, or is that something that has now disappeared into the rearview mirror?
That's a great question, because I think that's almost a pipe dream. We have a lot of structural difficulties in China right now with the demographic situation, and the shrinking labor force, and also the fact that a lot of production has moved out of China, especially the low value-added stuff. That the Chinese authorities don't worry about because they want to move up the value-added chain. But the latest news that we hear out of Apple is that even their high value-added stuff, the Apple 14 Pros and all that kind of stuff, are being moved to India and other locations because global supply chains are becoming regionalized, and the new stage of globalization is going to be regional hubs rather than using China as the main manufacturing hub. And that's an issue that has to be dealt with.
So Bill, when investors think about China, when they think about Asia, should I say, they should think not just about China, they should think about the entirety of Asia. They should think about what is happening in the countries around China, because that is where some of this manufacturing growth is going. How big a change and a shift is that from an investment perspective, do you think?
Oh, Guy, I think that's a sea change, because right now people have always thought of China as, my God, this huge domestic market, I want to get a chunk of it. But Xi Jinping has made it very clear that the dual circulation strategy he's putting in place is that if you want to come to China, sure, no problem, as long as you're dedicated to developing our domestic champions, our own companies to be world-class companies. If you're not going to do that, if you just want to exploit our marketplace, stay out. And I think the fact that people are reconsidering their investment strategies in China means that Asia is now becoming more of a consideration for They're centers for logistics, centers for manufacturing, especially low-cost manufacturing. But again, the source of innovation may not be just coming out of China, but the manufacturing hubs and research hubs in Singapore and Thailand and many of the other places in Asia.
We're going to see a meeting later on this week, Wednesday, I think, between Janet Yellen and Lee He. I'm wondering what you think that meeting is going to deliver, Lee He. I'm wondering what you think that meeting is going to deliver. China is clearly being impacted by the restrictions that Washington is putting onto the technology sector. How big an impact do you think they're having, Bill?
The most important topic for China, as well as the United States, is to try to develop that 21st century trade framework. Let's not forget, as much as I've said that China's growth may not be as fast as before, it's still the second largest economy in the world. And the two largest economies have to develop a framework where we can engage in trade of services, intellectual property protection, and all of the issues that have been talked about that haven't been dealt with. Unless that framework is put in place, it's going to be difficult to put in place the other regional trade frameworks that are going to be centered around what we in China develop.
One of the threats that we increasingly talk about, particularly in a post-Ukraine world, is what happens with Taiwan. Bill, if the situation plays out as you're describing, i.e. lower growth, a demographic problem that China needs to resolve, how big a danger do you think there is that China strikes out and Taiwan does become a threat, a risk?
That's fantastic. That's one of the great risks that the Western investors have to reconsider, is that when we talk about geopolitical risk, that's a nice vague term, but as China growth starts to slow down and it sort of loses its mandate from heaven to govern the people, and unless it can deliver growth, what else can it deliver? Well, it can deliver national security. So you hear stories of wolf warriorism and stories of how China is being threatened by all of the surrounding neighbors. And that kind of narrative is really spurring a lot of nationalism and militarism, and it's directed toward Taiwan. And the real question is going to be, how will the West counter those narratives? And right now, the Quad and other alliances that are being formed around China are one way to try to balance off this increased nationalism and militarism.
Over what time frame should we be thinking about that?
Let's look at how fast China regains its growth momentum. If China doesn't regain growth momentum, they're going to switch over to this militaristic narrative to try to create some nationalism and to distract from the economic difficulties. If economics really recover quite nicely in China, then I think we can postpone a lot of this this alternative geopolitical risk for a while. But it's still on the agenda, because let's not forget, the very first question Joe and I asked Richard Nixon and Henry Kissinger was, what are we going to do about Taiwan? This question of Taiwan has been on the minds of the Chinese people and Chinese authorities from the very beginning, and it won't go away.
So it doesn't appear to be. Bill, great stuff. Thank you for joining us on a holiday. We really appreciate it. Bill Lee, Milken Institute chief economist, joining us ahead of this China data we're going to get overnight.